also discussing about how that margin outperformance, the loan growth movement could now be behind them, the best of it at least. True. But Nimesh, what are the dealing rooms talking about?
Sona, if I tell you that the overall sentiment was weak, that will be an understatement. It was sheer fear in the market. A lot of traders have lost money. Investors' portfolios are down 15–20%, and clearly there is panic now from the larger institutions as well as from the retail and HNIs as well. That sums up the mood which was there in the market this week, and that shows up in the volumes as well. If you look at the average cash volumes this week, it's down 50% from the peak volumes that we saw on the Nifty and on the sensex. So that again shows that the participation was on the lower side. And clearly, that's the sentiment as well. The only positive to me was the fact that the FIs after net buyers in the cash market. At the margin, very small, but they are net buyers and they're not selling large. So that's a positive sign. The other feedback is, I was talking to some large investors at the Kotak conference as well this week, and the feedback was, the emerging market is seeing some bit of inflows back, and within emerging markets, there is now dedicated flows into the India dedicated funds as well. So that actually shows the kind of source which is there for the FI money for India. So that's something to talk about. As you know, Sonia, you pointed out, the biggest worry for the street is the underperformance of the bank Nifty. Both local and global investors, even at the conference, were very worried that despite very strong Q3, despite all the good things, the bank Nifty has underperformed, and most of the stocks are down 8–10%. So that's been a big worry for the market. I guess the other important thing to track would be the liquidity. For the last 10 days, there was real squeeze of liquidity for the retail and HN investors. That seems to be slowed out a little bit. There is some change at that level because the penalty on peak margins it's been pushed back to May now. So till now, for the last 10 odd days, there was penalty as well on peak margins. So that's been pushed back. So maybe that's the reason why you're seeing some bit of outperformance we saw on Friday's trade in the broader market. So maybe that explains a bit of that. But I guess from an overall market sentiment point of view, the sentiment is extremely weak and there's sheer fear on the street now. So maybe because there is so much of fear and so much of scare, the market may see a bit of a bounce back.
So I think that's the big question, right?